And Bitcoin is no different. My bank will give me a loan against my stock portfolio, and I can also get a loan against my Bitcoin portfolio, not from my bank, but from other lenders. Now, I can borrow against your Bitcoin, and I would do that instead of selling it. And the reason why I want to do that is right now, for the last 4 years, Bitcoin's been going up by about 55% a year. So I could either, one, I could sell the Bitcoin, I could pay the tax on that, and then I have no more Bitcoin to go up at 55% a year. Or I could borrow against the Bitcoin, let's say at 10% interest, but it's going up at 55% a year. So I still have the Bitcoin balance going up, and I'm only paying a small percent of interest doing this. Now, an example of this would be you or your business could hold your reserves in Bitcoin, save your money in Bitcoin. And when you need the funds for expansion to grow your business, then instead of selling the Bitcoin, you would borrow against the Bitcoin, and then you would preserve that position while getting the cash that you need to continue growing the business. And the best part is you avoid any tax penalties, because when you sold it for profit, you have to pay the tax on it.
All right, so to some people who don't understand this, let me explain. Around the world, everybody is talking about capital gains tax, okay? And it's now applicable to cryptocurrency. So which means if you own one Bitcoin and you made whether it's 5x, 2x, 10x on your Bitcoin, and you withdraw that profit, you pay a capital gains tax. Okay? Now some crazy people are trying to tax you on your gains even before you withdraw it. So I don't think those bills will fly. But in situations whereby you make a profit, whether you invested in stock or you invested in crypto and you made a profit, it's called a capital gains tax. Now, the tax is only applicable when you sell the stock or when you sell the crypto. Okay? Now, in this case now, what the rich do is they acquire assets. Real estate, gold, cryptocurrency, stock, they acquire them all. And guess what? Because they know that the asset is more valuable than fiat currency, they borrow against the asset. Now, remember, these people have cash flow. They have businesses that generate money for them. I don't know if you get what I'm saying. They have businesses that generate what? Money for them. So when they borrow and use the stock, the Bitcoin, the real estate as collateral, okay, they can use the money to reinvest in whether in their business or buy more assets, and take the cash flow from their business to pay off the loan. That's why rich people, they don't, like wealthy people, I'm not talking about the so-called social media rich, I'm talking about real wealthy people. You don't see them selling their assets just to be able to buy something or no. They borrow against their asset, knowing fully well that the cash flow from the asset can take care of the loan. And because you have assets does not mean you now borrow more than what your asset. No, you borrow according to your cash flow, not according to your asset. The asset is only there to serve as a collateral. So because you borrowed against your Bitcoin, you borrowed against your Ethereum, instead of selling the Ethereum, guess what? There will be no tax, because there is no tax on loans. Get it? Now, this tax framework does not exist in every country, but very soon it's going to come to most countries as the world more accept cryptocurrency for what it is and accept Bitcoin for what it is. So, get ready, understand this, and so when that tax policy comes to your neighborhood, you know how to, avoid such tax and still hold your Bitcoin or your Ethereum or whatever cryptocurrency you hold. All right, guys, or whatever asset you hold. Okay. All right, guys, that's it for this video. Thank you guys for watching. Till I see you guys next time. Take care and bye for now.